Markets closing the day higher across the board. The S&P 500 notching its 8th straight winning session. That is its longest streak since November. For more on the latest moves, we want to welcome in Mark Malek, Siebert Chief Investment Officer. Mark, good to see you.
Thank you. It's good to be here.
So you heard, it was bumpy there for a bit, but now you just heard our colleague Jared there talking about the everything rally. What explains the rally, do you think, Mark? And where do you see the market headed now in kind of near intermediate term?
Yeah, so we're kind of constructive on the market. We think the market as a whole has a little bit more room to go on the upside here. Nothing really has changed from prior to the dip of last week. There are one or two questionable numbers that came out, but in terms of the Fed's path, the Fed seems to be on path for 1 to 2 rate cuts next month. The numbers are certainly supportive of that on the inflation side. And in terms of the economy, the numbers are not as great as they could be, but they're also pretty solid. So we think there's plenty more upside from here.
What do you think is the biggest risk from here?
At this point, I think the biggest risk are some crazy downside numbers or something that Chairman Powell would not say later this week.
Mark, we continue to make our way through earnings season as well. Got some prints after the bell today. Of course, retailers are on deck. I'm just curious what you learned this earnings season, Mark. What have been some of your big takeaways?
Well, earnings came out, pretty positively. I think certainly on the retail side, we were listening to any shifts in consumer sentiment, and we did hear that, but that was largely expected. In terms of tech, people are looking for tech to knock it out of the park well beyond what analysts are expecting. We still have a big name coming up next week. Obviously, that number is going to have to, NVIDIA is going to have to knock it out of the park. So, the bar is very, very high for those, but those are the companies that everyone's looking at for upside at this point, so naturally.
And then I know you're also watching politics very closely, heading into the election here. Just got the headlines out from NBC News a little while ago that Kamala Harris is saying the corporate tax rate should be raised to 28% from 21%. It's presumed that if former President Trump wins re-election, he would extend the tax cuts that he put in place. How important is that, and what are the chances even that even if they won, they need to get congressional support? So I'm just curious how you're thinking about these issues.
Yeah. So I mean, clearly, I refer to this as the season of giving, right? So all of the candidates are trying to give whatever they can to the constituents they're trying to talk to, but we do at Siebert look at what we think that the individual can actually enact themselves versus what would have to get through. We know that a lot of what Harris brought up last Friday were things that Biden was trying to do for quite some time, but could never get them through Congress. So we're looking at things that they can do themselves, maybe directly. And from our perspective, those are the risks that we look most closely at.
What are some examples of that, Mark, what they could do directly?
So I mean, from the Trump perspective, unilateral tariffs are something that scares us a little bit. That we look very closely at. That would have a direct impact on the overall market, certainly on certain sectors. In terms of Harris. In terms of what Harris could possibly do, she can continue to pursue the forgiveness of loans, although we're not sure that will fly, right? Because that's met with a lot of legal challenges. So we looked at those types of things.
Well, it would seem that the tariff situation would have a more direct effect on certain stocks potentially than, say, student loan forgiveness, right? So do you advise clients then to act upon that at this point? Do you wait to see as we get closer to the election? Like, how do you game that kind of stuff out?
Yeah, at this point, what we advise is not to do anything but watch very, very carefully. I think the most important thing to do is wait and see what actually happens and sort of react if even necessary. As we know from history, we see that a lot of things that we expect out of certain administrations never actually take fruition, and they take time, right? So a lot of things that happen under the Biden administration, though they happened, they don't have any impacts maybe today, but they will be most likely on whoever under the watch of whoever is the next president.
A more immediate event, Mark, we're talking about on the show today a lot, of course, in the marquee event of the week is going to be the Fed's Jackson Hole Symposium. Jay Powell speaking Friday morning. What would you be listening for there?
Well, like I said, I'd be listening for what he doesn't say, that's the most important thing. As long as the message is consistent with what we've been hearing, what the market is expecting. The market is certainly expecting a 1 to 2 25 basis point rate hike.
You think if they didn't get that signal though from Jay Powell on Friday, okay, 25's on the way, what would the response for the market
I think it
be?
could be a very volatile response. It's a Friday. It's August. Those types of Fridays in August tend to have those types of responses. I think the market is considering it in the can at this point, certainly a 25 basis point move. So if he doesn't sort of allude to that and allude to continued hikes thereafter, I think you might see a volatile, possibly negative response.
We'll be watching for it. Thanks a lot, Mark.
Thank you.
Appreciate you coming in.
Thank you.